Good morning. This is Arlan Suderman, Chief Commodities Economist with StoneX, coming to you from the trading floor a little before 9 a.m. on this Monday, May the 11th. It's a big week for the commodities this week. It is a pivotal week for the commodities this week, more so for the ags than for the energies, but the energies certainly could see some influences as well. And we're going to go into all those reasons for that. As we look, that we still have the backdrop of the Iran war. We have certainly seen in recent weeks how headlines can drive prices of these commodities, led by the energy markets, but also the ags tend to follow along, the grain and oil seeds. The energies in the energies in the grain and oil seeds, I should say, have the closest correlation to the consumer price index over the last 10 years. And so when you look at the ongoing growing shortage of energy in the world because of the closure of the Strait of Hormuz, you look at the ongoing growing shortage of fertilizer, that is certainly a factor. Now, both Iran and the United States continue to hold on to their non negotiable objectives that are far apart from one another. After 47 years of listening to chants of death to America, President Trump refuses to accept any peace deal that allows Iran's Revolutionary Guard to have possession of enriched uranium that could be used in a nuclear weapon. For its part, Iran refuses to give up its enriched uranium while also demanding that it be given full control of the Strait of Hormuz to collect fees from ships passing through it while also controlling who is allowed to pass through it. And so the standoff continues. And that seems to be fine with Iran. As I've said before, Iran believes that time is on its side and perhaps its only option for survival for the regime. As such, world energy and fertilizer supplies continue to tighten. The global fertilizer shortage is expected to be most acute in 2027, while energy supplies are expected to experience rising shortages, especially in Asia, in June and July of this year, increasing as we go forward until demand is sufficiently cut to meet the new lower supply level. That is expected to significantly stifle economic growth in Asia and to some extent Europe in the coming months, but at a time when the US economy is gaining momentum based on data released over the past week. Now, that's the setting under which President Trump is expected to travel to Beijing this week. He's expected to arrive in Beijing on Wednesday evening, Beijing time, for a welcome ceremony. A bilateral meeting with President Xi is expected on Thursday morning, including a bilateral tea and a working lunch with President Xi. A delegation of U.S. CEOs are expected to accompany Trump on this trip, raising hopes of a trade agreement between the two powers. Chinese Vice President, I'm gonna, I'm not gonna be able to pronounce his name, and U.S. Treasury Secretary Scott Bessent are meeting this week ahead of the summit, seeking to work out details of an anticipated agreement. Look for the agreement to include economic initiatives, likely including China's purchases of airplanes and U.S. purchases of car batteries or something similar, along with agreements on extending the shipment of rare earth minerals to the United States and China's purchases of U.S. chips, energy, and ag commodities. I do not expect notable quantities of U.S. current year soybeans to be included in the deal, although a recent surge of soybean call options gives me reason to pause whether there's some insider trading on some information that we're currently unaware of. However, I do expect a package of other ag commodities to be included. Whether those quantities are market movers is yet to be seen. Now, I'm frequently asked whether the Iran war has hurt the relationship between President Trump and President Xi. I don't believe that's the case in any significant way. It's true that Iran has been a critical partner for China and a major source of cheap crude oil. But it's also true that this has been a relationship of convenience, with China and Iran's core values far different from one another. In fact, Iran's current actions of shutting down the Strait of Hormuz have proven to be quite costly to China. And President Trump and President Xi share a mutual respect for each other, one built on relationship, even though they share very different core values from each other as well. Both need each other politically right now. As such, they both have vested interests in seeing this happen this week. The remaining question is what will be the scope of energy and ag commodities included in the deal? The first, we have USDA's WASDE crop report, including its first official supply and demand balance sheets for the 26-27 marketing year. That will provide the backdrop then for Thursday's anticipated trade agreement announcement with China, as well as the weather stories and Iran war developments that go on possibly through the summer. The average new crop soybean ending stocks estimate coming from the trade is 361 million bushels, according to Reuters, which tells me that the trade doesn't expect China to purchase 25 million metric tons of U.S. soybeans for the coming year either, just as I don't. However, the trade expectations for the other ag commodities don't reflect expectations of big shipments to China either. As such, the opportunity for a surprise for the trade is certainly there this week via tomorrow's reports as well as Thursday's anticipated trade deal announcement. These markets will continue to be vulnerable to fund liquidation on rumors of a possible peace treaty with Iran, but the tailwinds are certainly behind them. Otherwise, as we head into the summer, this week should tell us a great deal. Now, briefly, I want to go into what I'm looking for out of this report tomorrow. And with this May report, the focus shifts to new crop ending stocks because we're not expected to run out of corn, soybeans, and wheat ahead of this year's harvest. That could change if we see significant quantities of these commodities, particularly soybeans, but possibly corn, included for the current marketing year, included in the trade deal. Now, I don't expect any notable supplies of soybeans to be in there, corn possibly. And remember, we've got a pretty big surplus of corn right now in this current year. But the bottom line is, otherwise, we're generally not expected to run out of supplies ahead of harvest. So then the focus becomes these new crop balance sheets. Are projected ending stocks going to be low enough to raise concerns of possible weather scares or anything else may change, like the trade deal? What my expectations are is for wheat ending stocks at 771 million bushels for new crop. That's about 50 million bushels less than USDA. For corn, 1.833, excuse me, less than the average trade gas. For corn, 1.833 billion bushels. That's about 90 million bushels less than the, excuse me, less than the average trade gas. For soybeans, 308 million bushels. That is about 53 million bushels less than the average trade gas. All of these would leave us a little bit more vulnerable should we have a significant trade deal, should we have a significant currently unknown weather threat in this coming year. Again, I see 2027 as the year when the fertilizer shortage starts to hit globally to have its biggest impact, not this year. This doesn't, in and of itself, give us justification for a bull market, but it does leave us more vulnerable to one and to these other possible developments. So, big week for the trade this week in the commodities. I do look for energy and ag commodities to be included in a trade deal. Will USDA include that? Probably not. So, where is their baseline? They will be setting the baseline for trade expectations tomorrow. And then we have the news coming out of Beijing. Overall, we're seeing more tailwinds as long as the war with Iran continues to linger and we have this potential significant trade deal with China. And with that, I'll conclude my comments. I'll be back with you later this week if we see significant developments. And of course, with a webinar at 2 p.m. Central Time, 3 p.m. Eastern Time on Tuesday, May the 12th, to go over the crop report and what's in that. Until then, be sure to like and subscribe to continue to get these updates from the trading floor.